Welcome. Just want to get a couple of things here orchestrated. All right, so everyone, welcome for Closing Bell. My name is Fausto Puglisi, president, founder of CyberTrade University. I'd like to thank everybody for coming. Hopefully, everyone is having a exciting market. September, October, November, the best months, and obviously going into the new year, we always like to bring in one of the great presenters. And let me tell you, I'm so excited to have Tom. Tom Sosnoff is such an old friend of mine. I known him for about, let me just change the slide here. Known him for probably about 15 years now, maybe at least 10, 15 years probably. And Tom is some of you don't know, he's the founder of Thinkorswim, and and started Tasty Trade, and now has launched his new brokerage firm, Tastyworks, and he's going to talk about this new platform. Now I know we have a lot of options traders out there, and he's probably using some of the other platforms, but he's going to go over in great detail and explain to you how this system works. And he's also going to take a lot of questions. Just to tell you a little bit about Tom, for some of you who don't know, you can see from the photos right there. I saw Tom this weekend actually, and he's doing this great tour. And I'm telling you, if there's anybody could bring a crowd, it's definitely Tom. And like I said, he loves food. I know Tony was talking about going to getting Brooklyn a little bit and talking about getting some good food and stuff like that. And the whole thing about it is that we're being very good in the education business. Great traders love to surround themselves, and it's just a great honor and privilege to have him on again. Trying to get him on for a long time, but he launched his studio. It's doing phenomenal. I was just there. I'm telling you, if you guys ever get an opportunity to see his studio, I tell you, I've never seen anything like that before. And let me tell you, out of all this time, he's been working on his new platform. And when I was there, I looked over it. I mean, it's hands down, it's got to be the best platform I've seen in the industry when it comes to using all those options and features. And I'm going to be showcasing it on CyberTrade University all the time. Um, Trying to teach you guys a little bit about it. But I don't want to take too much from Tom. We're very fortunate to have him here for an hour. I'm going to come by and see him next week. I'm going to be in Chicago, his hometown. And, like I said, look forward just to have him here again. So, Tom, I don't want to take too much time away from you. Tom, the stage is all yours. Everybody sit back and enjoy. And let's give him a big round of applause. All right? Stage is all yours.
Wow, that was like a really nice introduction, Fausto, and thanks so much. And I didn't really get a chance to thank you because we kind of got caught up, with the group we had in New York on Saturday. But thanks so much for coming out, and it was a really fun show, and I hope you liked it and everything else. And you're right, I surround myself with another Italian guy all day long, Tony Batista. So with the two of you guys in the room together, there's a lot of hand gestures and stuff going on. But you were exactly right about our pilgrimage to Brooklyn this weekend. We had some incredible pizza at L&B Spumoni Garden, which was unbelievable, including the Spumonis. And then we made it out to Tony's. We did the kind of the true run to Tony's, kind of the mecca for Tony, which was Randazzo's in Sheepshead Bay. So we did the old school restaurant tour, and it was pretty amazing. So great time in New York this weekend, and yes, thank you for coming out to Chicago a couple weeks ago. It was the first time you ever came out in the. I think you're right. I think I've known you now since like the early 2000s. Maybe it's been about 13 or 15 years. And I think it's the first time you ever came to Chicago without bringing black and white cookies. So now you know what your mission is for next week. But we look forward to seeing you here on whatever day you have some free time. And just like Fausto said, to anybody else that's listening today, we're one of the rare companies that has an open door policy. I used to actually have this policy at Thinkorswim, and then unfortunately they took it away. But when TD bought it, but we still have it at Tasty Trade and Tastyworks. We have an open door policy, so we encourage people to come by, kick the tires, spend, 5, 10, 15 minutes with us. And the only reason it's so short like that is because we all have work to do. But we have visitors every single day, and we love people to see our production studios and also our brokerage firm. They're only about 4 or 5 blocks away from each other. So also, as a quick note before I start, so I can focus on a software demo and a discussion today. One of the things I like to do is not have to read all the questions that come in, because it's really difficult to read the questions and also, individual questions and focus on making a presentation. So I have asked Alan Wood and Chris Grace. They are two people that if you've watched Tasty Trade at all, you may know them. They used to be on the research team, but now they are over at Tastyworks. And they are two of the people that run our brokerage business. And so they are both on today. They are clear of the concept. Basically, they can answer any single question. So Alan and Chris are both on. They will answer. We have a general rule: no questions off limits. Ask anything you want. So both those guys are on. They'll ask any questions. I won't be reading the questions. If Fausto wants to jump in at any point and ask any question, I'm happy to cover. Just happy to answer anything. And again, enjoy. I'll probably go for the next, let's call it the next 45 or 50 minutes. And I will try to take you through a bunch of different aspects of the trading platform, and I'll also give you a little background as to, why we built this platform and what we are trying to accomplish, and why we feel like our mission is so important, and also, why it's so great to have, channel partners like Fausto. When I say channel partners, that means people that, that we work with, that support us, that understand kind of what our mission is, so that, we have one goal, which is we're an advocate for the retail investor. And I don't think anybody in this whole industry is truly an advocate for the individual self-directed investor like we are. I mean, there's lots of brokerage firms and there's lots of financial service companies, but we don't do any business other than self-directed investing, which means there's no bait and switch here. We don't get you to open up a brokerage account and then try to gather your assets for some other purpose or anything like that. We don't offer mutual funds. We don't offer managed products. We don't offer anything except direct, market access. We are product indifferent. And one of the reasons we wanted to build Tastyworks rather than stay as a marketing engine for other firms was because we decided at some point in the last couple of years, as we were proving concept, and we decided to build a business around content. We feel like content is incredibly valuable to building wealth and to just general wealth creation. So one of the things we did along the way was figure out at what fee structure do individual investors have to be at in order to be successful. And this was a huge challenge for us. So we have a team of 8 data scientists on staff, and we basically challenged them with figuring out through various Monte Carlo simulations, and hundreds of thousands of them in the end, figuring out at what price level do our individual investors, self-directed individual investors who are active traders, at what price point are they competitive with the market-making firms? And we finally reached a price point which was just about in the high 70s, a reduction of what the current rate structure was in the industry, and it changed the way individual investors can trade. And now what you've seen in 2017 is most of the big firms have lowered their rates because Tastyworks came on the market and lowered rate schedule. Everybody followed us, and we've saved individual investors in the first 9 months of this year almost $250 million, which is incredible for a small firm. Sure, it tightens the margins, and sure, it changes the amount of resources we can commit to technology, but still, it was important to do because now individual investors are truly on a level playing field. Myself and everybody else listening today, the nice thing about Tastyworks is that everybody pays the same rates. There's nobody out there that has a lower rate, and nobody pays more. And it's everybody's on the same rate. The rate schedule is a huge reduction over the rest of the industry. It gives us enough room to make a little money, and it also allows individual investors to compete very evenly with whoever their counterparty is. So our rate schedule is we charge $1 for options, and that's round turn. So it's like 50 cents a contract. You pay $1 to buy something, you pay nothing to close. For stocks, we charge $5 to buy something and nothing to close. And for futures, it comes out to the equivalent of $1.25 each side. And we'll be launching futures in the next couple of days. And that's where we stand with respect to our fee schedule. There is nothing else. So that's cool. The only other thing I want to tell you about Tastyworks was the real difference in the platform from most other platforms. And again, I believe that financial technology has been commoditized. And what that essentially says is that there's not a big difference between platform A, platform B, and platform C. The technology that we built in the past, which was Thinkorswim, to the technology we built today, which is Tastyworks, dominates about 40% of the marketplace in total. So we think we're accomplished at building, front-end retail technology, because about 4 out of every 10 orders comes through technology that we built. The difference with Tastyworks is that it's a very light platform. It's not bloated at all. It's extremely light. We knew exactly what we wanted to build this time, and we built a very fast platform. It's all built on high-frequency middleware. So the guts of the platform is very fast. We're down to a few dozen milliseconds, whereas most other platforms are still in the, somewhere between 700 and 800 milliseconds. We're down into right and around the mid-30s right now. So it's crazy how fast this platform is compared to other trading platforms. Now, does that give you a huge edge? No, not really. But it just means you're competitive with all the high-frequency firms, and you're not disadvantaged to anybody else on the street. So that's a cool thing. So it's very inexpensive. It has amazing content associated with it. It's all free. The technology is free. The data is free, and the rate schedule is very aggressive. And that's kind of a little bit of the background. For myself personally, if you're learning about us for the first time, this is a business that I've been in since I got out of school, and that was a long time ago. I started this business in 1980 and 1981, and I've been doing this ever since. So it's been at least 36 years, I think. Maybe it's been another half year more than that. We believe we ran one of the most active prop firms for about 20 years, and then we built the most active trading firm, which was Thinkorswim, and now we're building the firm that's truly changing the world, which is Tastytrade and Tastyworks. And this has been my favorite project ever, and I'm happy to work with old friends like Fausto, and it's really great to be to kind of be back in this business and be able to help individual investors. So without much further, and that only took 6 minutes, I'm going to tell you a little bit about the platform. So for starters, we built it so that, and by the way, this is a downloadable. We have a web-based version too, and we just launched our iOS version. So we'll be launching our Android version very soon. But this is the version that I'm showing you now that most people use. When I say most people, about 85% of our user base uses the downloadable. It's a Java-based downloadable, and it's designed by the same people that originally built Thinkorswim 17 years ago. It's the same CTO. It's a bunch of the same developers. We've kind of put the gang back together, and this is their new vision. It's a little bit different. Again, it's designed not to have as many features. It's designed to be much quicker. It's designed to get you from point A to point B, and then let you focus on things that we really think matter as far as making money. It's a little bit different approach. So like most platforms, it offers you kind of a watch list. Now, this is my own private default watch list. But the cool thing about Tastyworks is we built a watch list where, of course, all the columns are configurable and all that kind of stuff. But we built a watch list that allows you to run the entire platform from your watch list. So, for example, like if you wanted to trade Twitter, you just click on the bid or the offer price in your watch list, and then it pops Twitter into the trade page, and then it would pop Twitter into your positions if you had a Twitter position on. This is just one of the accounts that we use. But like if I click on the bid on Walmart, it will type in Walmart onto the trade page. It will pop in Walmart positions in this account. And if you wanted to look at a chart, for example, it will pull in a Walmart chart. If you wanted to look at all your activity, it would pop in, Walmart activity. All your positions, it would pop in positions. And on the trade page, it will pop in, obviously, a table mode for Walmart. And again, so everything on the platform runs from the column. We call it the left-hand gutter. Runs from the left-hand gutter. And the neat part is when you click anything on the platform, like for example, if I click on the offer price of Google here, it puts an order into by Google. It pulls Google up on the top of the page so you can see a quote. It pulls the whole Google page, and it pulls all your Google positions. If you had Google positions, this account right now doesn't have any Google positions. So, and it would pull all your positions here, and then it would pull all your activity for the day over here. So for example, this is activity for the day in this account down here. But since I'm not working any orders right now, it doesn't show anything. And that's kind of the really neat thing about the platform. That's the design from our development team here in Chicago. We built this entire platform in Chicago. We don't have any outside consultants. We build the whole thing in-house. We have an incredibly safe environment. Our development team is in Chicago. We work out of the Google building in Chicago, which means we're one of only 3 companies in Chicago that lease space in the same building as Google, so it's an incredibly secure building. And of course, even all our computers are held offsite in a secure colo facility. So there's not even a desktop in our offices. So for security purposes, we built a super secure platform. Now I'll get into some of the fun stuff about the platform, which is all built into this middle page here. For starters, the position tab looks a little different than most other position tabs. We obviously show you what the stocks do today, stocks and futures and everything else that you may have a position in, but then we let all these columns be configurable. So you can see your delta, gamma, theta, vega, your P&L for the day, your P&L open, your probability of profit on the position. And again, all of these columns are configurable by going up here to the wheel in the upper right-hand corner of this. And you can from this page, just choose kind of the different columns that you want to see. So for example, there's probably like, 30 different choices here. You can have beta weighted deltas, you can have beta, you can have your unrealized gain, you can have different quotes, bid last, mid, you can have percent P&L for the day. You get to choose what you want in here. And from this column also, you can see, everything from position detail, your watch list, your trade page, you set everything up. It's very simply done. There's nothing complex about this. If you want to see your positions, like in Apple, in case I want to see my positions, you just click on Apple, and there you can see, here's some Apple positions that I have on in this account. If I wanted to see some positions, for example, that I have on in BABA, here's my BABA positions in this account. And they go, in chronological order from October all the way through December. You can see the P&Ls and the deltas and everything else for each strike. And then if you wanted to make a trade from here, you just right-click on any one of these lines, and you can close the position or roll the position by just a single click on any one of those lines. The other really cool thing about the platform is it's designed to close or roll with a single strike. Our developers asked us, they said, what action do you take most often on the platform? And we said the action we take most often is to close or roll any strike. So we built a platform, and I'll show you how this works in a second, where all you have to do is highlight and right-click, and you can do anything you want. It's super simple. That's the position tab. So the next tab we come to is the trade tab. And I'll spend a few seconds on this because it's kind of neat. On the trade tab, we display earnings. That's where that little E is here, and that's where the earnings date is here, November 1st. We also show the implied, at the money implied volatility, and then we also show kind of like I'll open up October for a second, and we show a plus or minus move. I have the screen a little tight right now, but on a normal size screen, we'll show you the plus or minus the size of the expected move between now and, let's say, October expiration, which is 29 days from now. Now, here's the neat thing about the platform. It does a few things that other platforms don't do, and it's all designed to support the self-directed active trader. The first thing is, and I'm just using BABA as a random example. So BABA is a stock that's had a huge move recently. I'll show you right here. Stock's been basically hyperbolic. It's just a quick little chart of BABA. And like, again, once you bring in a quote, it filters through the entire platform. So this is a quote of BABA. The other thing it does is when you look at a quote, the first thing it shows you is the IV rank. The IV rank is how we measure implied volatility against itself over the course of the last year. What does that do? That gives us context around the term implied volatility. If I told you that the implied volatility in BABA was 26.2, you wouldn't know if that is expensive or if it's cheap. And if you believe that fear is overpriced and volatility is overstated, then you need to know if the implied volatility is relatively inexpensive or relatively cheap. You need some context around that. Just seeing a number of 26.2 doesn't mean anything. So what we do is we rank the implied volatility from 0 to 100 to determine whether or not this rank is sufficient for you to, for example, sell premium, sell a call spread, sell a put spread, do a calendar, do a butterfly. It doesn't matter. Whatever you want to do an iron condor. Well, 38.7 IV rank is relatively high IV rank because most stocks only spend about 25 to 30% of the time above 50%. So the majority of the time they spend between 25 and 50% in the IV rank. So this would be considered a sufficient IV rank. The volume's good and the markets are tight in BABA. So this is an interesting stock to trade. We then look at the options. And again, these are closing prices here, so it's a little bit different. And let me open up just a few more strikes. I'll open up 12 strikes total. So we show a couple of things when we look at the different strikes. Let me make this a couple more strikes. I'll make a little 16 strikes. Okay, so one of the things we show is this line is where the current stock is. This line over here, where it's highlighted in brown or a little like kind of a reddish brown, that is the expected move. The neat thing about this platform is it's designed to give you all the information you need just by a quick stare at the platform. So here's the current strike, the at-the-money strike, which is this kind of reddish-brown line across the page. This is the expected move in the underlying. This is the one standard deviation move. This is the dotted line, shows you the one standard deviation move. And when you start to do spreads, for example, let's say in BABA, the stock's had a nice run. It's 177.16. Let's say I decide, okay, I'm a little bit bearish. I want to sell a call spread in BABA. So I'm going to go up, for example, to the 35 delta, which is this option right here. That's our default delta. I'm going to sell the 182 by just clicking on it. So the beautiful thing about this platform is you want to sell an option, just click on it. You want to buy an option, just click on the offer. You want to sell an option, just click on the bid. Let me close these up and I'll show you again. So here's BABA. This is the expected move to October expiration. This is a one standard deviation move. These lines, and this is your current stock price. This is the 35 delta call, the 182.5 calls. If I wanted to sell these calls and build a short credit spread, for example, or if I just want to sell these calls, I just click on the bid. If I want to build a short credit spread, I just click on the offer of the next option I want to buy. There's your credit spread. 75 cents, almost a third of the width of strikes, about 30% of the width of strikes. The default quantity is whatever you want it to be. In this platform, in this account, I have the default quantity set at 5. So that's my default quantity, so it pops in there. We show you a bunch of things. So first, we show POP, which it means probability of profit. So all your analytics are built right into this line here, so you don't even have to go to a different page. So your probability of profit is 68% by selling that call spread. The amount of extrinsic premium is $375. That's 5 times 75 cents, or $375. P50 is the probability of reaching 50% of max profit, or in this case, 187.50, which is half of 375, or $37.50 on each one lot. So what we show you again is probability of profit on the trade based on pure statistics. This is off of our own proprietary Black-Scholes model, but it's been standardized as an option model. This is the amount of extrinsic premium. This is the probability of reaching 50% of max profit, because that is the optimal point to take a spread off. This is your deltas on the trade, and you can see the difference between these two options. Let's just call it is about 11, and so it comes up to they're just averaging that. This is your theta per day, and there's your max profit, and there's your max loss on this trade. Now here's some kind of cool stuff, and this is why, by the way, I should tell you, this is the fastest growing platform in the history of online brokerage, and the reason for that is we made certain things really simple. Let me show you what they are. So here's a $2.50 wide short call spread. If you wanted to keep the same short strike, the 82.5, and make it a $5 wide call spread, you just drag this strike 1. If you want to make it a $7.50 wide call spread, you either drag this strike down 1, or you drag this strike up one more, and then you see what it does, the difference, and then you see all the changes to your, you don't have to change your quantity at all. It shows you all the changes in basically in the analysis of that trade. So I went from a $2.50 wide spread to a $7.50 wide spread by just dragging the strikes. So it's really, really simple to move the strikes up and down. If you decided that you wanted to condor off this spread, make it into an iron condor, rather than having to recreate another position, all you have to do, for example, is go just like you did on the other side, go to the 35 delta or approximate 35 delta strike on the put side, click on the bid of the 172 puts to sell them, click on the offer of the 170 puts to buy them, and now what you've done is you've created an iron condor with $1.46 in total credit. And again, the neat thing about this is if you wanted to skew this iron condor, you just move the strikes. Now you have a $5 wide put spread and a $2.50 wide call spread. If you wanted to make it an even iron condor, then you just widen this out, and now you have a $5 wide iron condor collecting $2.57 in credits. If you didn't want it to be a delta neutral iron condor, and you can see how low the deltas here, they're only 5, and you wanted to skew this and make it a short iron condor, you move the put strikes down, and here you've created now 36 short deltas, and you still have a $5 wide iron condor, but you're short closer to the at-the-money put spread than the call spread. So the beautiful thing here is anybody, even if you've never traded an option, never traded a spread, get all confused with all these strikes, you can set anything up the way you want. You can mix and match it any which way that you want. You can use any combination of skewed, unbalanced, or anything else. So for example, what does unbalanced mean? It means if I wanted to sell more call spreads than put spreads, I just highlight these two lines and change my quantity. So I can go up to 10. Now I have 10 put spreads and 5 put spreads and 10 call spreads. And I can still change the strikes if I want to, just to collect more credit or less credit. This gives you the flexibility that no other platform has ever even designed. Again, we have really brilliant designers, and they've been building, derivatives technology for a long time now. They're the best in the business, and it's really great to be able to kind of disseminate this down, get your feedback, and also deliver this to our customer base, because people benefit not just from the low rates, not from the content, but also from kind of the ingenuity behind the design. And design is a lot nowadays. If you wanted to route this order, whatever it is, you just hit review and send, and then send. I'll show you real quickly. Review and send, the trade comes up, and then you hit send, and the trade pops up on this side of the page. It would be queued up for tomorrow morning. If you want to cancel the trade, it's easy as hell. Well, first, before I cancel it, let me replace the order, and instead of going for a 386 credit, I'll lower it to a 380 credit, which is probably a more reasonable price for a fill. I'll re-enter it, and did you see how fast that changed here? There's no platform like it in the world. No retail platform. There's only high-frequency technology like this. There's no other platform. In fact, the last time Fausto was in Chicago, I took him and showed him how fast we trade stocks and futures on the platform, and I'll take you to the active trading page in a second, and I'll show you. It's super cool what this platform's able to do speed-wise. If you want to cancel this order, you just right-click on the order, hit cancel, and it's gone. And then there's a message, obviously, that pops up on the left-hand side of the page, and you can leave that message up for as long as you want, or not at all. That's completely up to you. So that is kind of just in a nutshell the simplest approach to this trading platform. But we took it a couple steps further. So let's say, for example, you didn't want to even set up the strikes. You wanted the platform to do it for you. So there's a drop-down menu here. And if you wanted to sell an iron condor short, you can just click on iron condor, and it pops it in for you automatically anyway. That's your choice. And then you can adjust from there. So if you're unsure how to set up something, like, for example, let me clear this and forget the iron condor for a second. Let's say you wanted to go in here and you wanted to set up a J Lizard because you wanted to get long BABA on a down move today. There, it just set up a J Lizard for you. Short a put and short a call spread. And it went to the default strikes that you have built into the system. And so it's a very smart platform in that regard. It allows you to default your setups to whatever you want to do, and then takes you immediately to the trade page. And again, the charts are the same. The watch list stays. Your positions pop into the right-hand side of the page. You can change a position. You can roll a position right from the right-hand side of the page. Piece of cake. But we don't stop there. We then offer a different mode for people that want to see it in a different light. Some people don't like a curve mode because they think it's complicated. So we present, don't like a table mode because they think it's complicated. So we also present this in what we call a curve mode, which allows you to see it inside of a distribution curve. And again, these are the exact same. It's the same trade. This is the same J Lizard. But what it shows here is wherever's green is your profit area, wherever's red is your loss area, and it shows you where the expected move is for this stock. And what we do is we just set it up a little bit differently so that you can drag these tiles. If you wanted to move your put down 1 or 2, you can move your put by just dragging the tile. If you wanted to drag your call spread out a little bit, you can drag your call spread. It will change your credit. And then you can route an order directly from the curve mode. You can see all your probabilities up here. You can see your deltas, your probability of 50% of max profit. Right from the curve mode, if you choose, you can send orders, and you can send orders by clicking on it, looking at what you're sending, or you can just double click and it will also send an order, so you don't even have to review the order if you don't want to, if you're going just for speed. Let me go back to the table mode for a second. And if, for example, you wanted to trade something like, let me cancel this order so I don't leave it in for tomorrow. The next thing is we also offer a third order interface, which is an active trader mode. Now, the active trader mode is a little bit different. So let's say, for example, I wanted to trade, and just looking at some of the positions, let's say I wanted to trade here's a S&P position in here. There's let's say I wanted to trade S&Ps. So one of the things we can do is we can pop in we can highlight whatever we want. I have the safety on here, so it will only route orders when I want to route orders. And from an active trader interface, I can route any order I want straight from a little bit different look, and without having to go through the whole table mode or anything else, and just route orders directly from an active trader interface. And if I have time, I'll walk you through this active trader interface, but right now I want to focus on everything else on the platform. So this will give you kind of where the S&P minis are right now, what your current position in here is, what the minimum tick is, what the notional value is, and you can trade, and here's where the current price is, and it will give you the easy access to trading any single future or stock with just a single click and absolutely no delays. Just a little bit different look though. That's the curve mode, and then back to the table mode for a second. And the reason I want to go back to the table mode is because I want to show you that most people that use this platform, that look at their positions, and I'll look at in this account, our BABA positions. Let's just say I wanted to roll the 175 calls. I'm short a 5 lot. I want to roll the 175 calls forward from October to November. Well, most platforms require a little bit of work to do that. This platform, you right click, you click on quick roll, and you're done. October to November, the roll trades for 360, that's the mid price. You hit review and send twice, it pops it right in, the order's routed. That's it. That's all it takes in this case. And let's say you wanted to roll this spread. So you highlight this, the 175 and the 180s. It's a short call spread. And let's say you want to roll the short call spread. You click on quick roll and you roll the short call spread, which is trading for a 1 penny credit from, oops, I'm sorry. You can sell, that's a dupe order. I already have an order working on those strikes. Let me cancel this. Doesn't want you to dupe the strikes. So I will go to quick roll. And if I want to route this, I can route an order where I'm rolling a spread from 1 month to next month with a single click. It is super easy to roll. It is super easy to close. So you right click, close order, right click, roll order. I'll take you through that closing process too. Let me cancel this. So let's say I wanted to buy back this 15 lot of the 175 puts. Right click on the order, move to close. You can choose your default quantity, which is in this case 5, or you can choose your position quantity, which in this case is 15. I think I'll go to my default quantity, it's 5, or you can choose your position quantity, which in this case is 15. I think I'll go to my default quantity, click on that, 5 lot, review and send, double click it twice, pops in the order to close. This is the simplest platform, I believe the simplest platform ever designed for rolling and closing orders. You throw on top of that the ridiculously low rates and all the kind of the intuition that's built into the platform, it's very neat. So let's cancel this order in Baba for a second. And that's kind of, that's a big portion of the initial trade function. And the platform is much deeper than that. It offers obviously your choice of different, whatever, how many strikes you want to look at. You can see all the weekly options by just clicking on this funnel, and you can choose all expiration, non-regular options. I'm choosing regular options only. But let me take you through some of the other aspects of the platform, and then we'll see if we have time left to go through a few other pieces. So again, going back to the start, your position tab with all your different underlyings on, with your delta, gamma, theta, vega, and then by the way, on the top row here, which I do not have exposed right now because I didn't want to show the size of these positions or the amount of money in this account, because that should be private. So you can privatize this, but when you're not making it private, you can see all your P&L and you can see your deltas and everything else. I just made it private by clicking on this little down arrow here. So that's their position tab. Then you have your trade page, and as you can see, some platforms will freeze up when you have tons of positions on. This platform has, I don't know, this account has 70 or 80 different positions on, and it's just as fast as if it had one position. This is your trade page, and you just go right across the platform. And the beautiful thing is nothing else changes. The activity tab, this shows you everything you did over the course of the day. In this account today, I think we made about 35 trades or something like that in this account. A little bit slow today. The watch list on Tastyworks is a really cool piece of functionality. It's completely configurable. So the neat thing is every one of these columns across is configurable. On this particular platform, we are showing, I'll start, since it's Rosh Hashanah, I'll go backwards. I'll show at the money implied volatility, liquidity. We have our own liquidity indicators based on how we rank the bid and offer differential. This is the correlation to the SPYs, because it is extremely important for you to have a position that is non-correlated. So you can see SPYs, obviously the correlation would be 100, but if you want to see the correlation of US Steel to the SPYs, it's only 0.31. If you want to see the correlation down here of GLD, which is physical gold, to the SPYs, it's a negative 0.19 correlation. So this gives you a little insight into correlation. Beta, we're using a 5-year beta in here, and this will give you your beta weighting to the S&Ps. So obviously the S&P weighting is going to be 100, but if you see, for example, if you see GDXJ, which is the junior gold miners, it has negatively beta weighted. And then if you take a look at something like, let's look at a different stock like XOP, for example, which is a drillers and a driller ETF. The beta weighting is 2-to-1, so that's interesting at 206 volume. And then comes to us the all-important IB rank. And what's neat about this platform is we've eliminated all the need for traditional scanning, because we used to scan for stocks that were in play that we looked at or something like that. This is set up with the positions in this account as the watch list. So when I look through my positions, I can see all the different underlyings that I have with IB rank under 10 that may get me to take off those positions. If I wanted to switch this around, I can look at them from high to low, and then I see like Costco has the highest IB rank. I might want to put more positions on. I don't want to take anything off in there. Same with GE, Hertz, CBI, CORN, PayPal, First Solar, Apple, Teva, Amazon, Netflix, CMG, they're EWY. They're all around 50. Those are underlines that I might want to put more positions on because the IB rank is so high. So we make it super simple. Then if you're looking for new trades, one of the things you can do is you can go for example, notable stocks, or you can choose for high option volume stocks. So that's a whole nother choice. So you can just look and see what's trading. So everything is built into this platform so that you don't have to go to separate scan pages and you don't have to do all these complex things. We tried to simplify the platform so that it allows you to do the most with the fewest number of clicks so that you can focus on our trade small, trade often, not pay a lot, be actively engaged. And those who are most actively engaged can give themselves the highest expected outcome of basically the highest expected outcome. What that means is not P&L. That means you can get closest to what your expectations are for success. You have to learn how to make money from that. You know, this business is a combination of multiple things. And in order to be long-term successful, you have to be able to execute at an expected, with an expected outcome. If you can't execute with an expected outcome, it's almost impossible to be successful. So how do you execute with an expected outcome? Well, the numbers don't lie. It's just a game of math. So in addition to that, you hope for some directional bias that you're correct on, and you hope for obviously some premium decay, and you hope that you can manage some winners. You combine all those together and you have a game that is not a zero-sum game. You combine all those together and you have an opportunity to be successful. And again, I shouldn't have used the word opportunity twice, but you have the ability to be an opportunist and to take advantage of situations where implied volatility or fear is overstated. Anyway, that's the watch list page. You can choose to watch tastytrade if you like on here, and some people, choose to, some people don't. That's fine. You can use our charting package, which is pretty good. I wouldn't say it's the best around. I would say we built it as a utility vehicle, and it's pretty damn slick. But it's got about 100 studies, and that's enough for us. We're not technicians, so that's fine. You can look at your account history, and you can see what you've done today, or you can see what you've done, all along. And we also have a follow page, which shows you what all the people that work for us are doing, and what all of our researchers are doing, and what they're trading. So you can see their faces, you can see all their recent trades. These are all things that were made in the last trades that were made in the last hour today, and we only show kind of our own team. So it's not something that this is not part of the world of social media. This is just showing you what different people that work with us are doing. For example, this person bought an iron condor to close. This person bought a vertical to roll. This person, sold an iron condor to open a new trade. This person bought an iron condor to close. They're all different people, so it's just interesting. And we show all that, so it's full transparency from front to back. Again, I will go back to the trade page and just show you that this is essentially the guts of the Tastyworks platform. It's a gutter on the left-hand side of the page, right below where my cursor is now, that allows you a bunch of different menus. You can choose one of our menus. You can create your own menu, make that menu configurable. You can use anything that, you can use our futures menu. We don't pass through any of the data costs or anything like that for receiving quotes on the platform. Everything is included. We show you, without having to change page, across the board at the top of the page, all these different columns. We will be adding an open API later this year. We'll be adding a virtual platform in the fourth quarter. So if you want to paper trade or do something in the virtual world, you'll be able to do it. But first we'll be adding the open API, then we'll be adding the paper trading platform. We will also be adding portfolio margin in the fourth quarter. We're also going to be releasing probably within the next week, a brand new margining system, which will be the most aggressive in the entire industry. It will allow minimum margin requirements regardless of position. So in other words, it will minimize your capital requirements. We did that to afford you the max in capital efficiency, and I don't believe there's another platform in the world that does that. So we do not charge you for a special risk assessment that some platforms do. And so it's a very aggressive trading platform. It has the mentality built behind it of trade small, trade often. I threw a lot of stuff at you. As you can see on this page, this has now the expected move. I was able to finally widen out the page a little bit. So it has the expected move to each one of these expiration cycles. So it shows plus or minus whatever that expected move is. Like I showed you before, it has the earnings up here, and wherever you see a dot, that means you have a position in here. And if you're working an order during the day, it will show, for example, another dot will pop up and it will show you, where you have working orders. If you decide, let me see what time it is, 4:15, so the futures markets are actually closed right now. But if they were open, I could show you routing some futures orders. We will be releasing futures in incredibly short order to our entire customer base. And our futures will offer stocks. I will offer futures and options on all the underlying futures, so there'll be nothing held back. Let me think if there's something else that I left off of here. I do not believe so. Okay, so I thought what would be fun is to talk a little bit about some of the different ways to use the platform, but I'll take a 1 second or 1 minute break here and just ask Fausto if we're going at a good pace for you, if there's something else you want me to do, or if there's a specific topic you want me to cover. Or not. Okay, well, I lost my connection to Fausto, so that's fine, which is perfect because that gives me a, or maybe he's, what do they say? First you make the gravy. Maybe he's making the gravy tonight. All right. First you fry the garlic, then you make the gravy. All right, I am going to show you something. So a lot of people this afternoon were talking about First Solar. And the reason they were talking about First Solar is not because they have earnings coming up on November 1st. The reason they were talking about First Solar is because there is some kind of a binary event tomorrow. Now, I didn't go look at First Solar. I don't even know what the binary event is. It's I heard it's some kind of ruling with respect to solar, but it's irrelevant because you can see that the implied volatility in the front month is in the front weeks that expire tomorrow is 273%. And you can compare that to the next weekly and then the normalized volatility. You can see it's significantly higher. So one of the cool things about this platform is that it's open to, we're open to any kind of spread, any kind of approach that you want to trade. So let's say that you had limited capital and you wanted to do something in First Solar to take advantage of that extreme high volatility, which is a one-day play, and you wanted to do a binary event. Well, a couple of things you can do here. Again, we talked earlier about an iron condor, so that would be one thing. But let's say you wanted to do, for example, maybe a broken wing butterfly. The expected one-day move in here is about $4. The stock closed just under 49, and you can see if you look at these strikes, the 49 strikes or the 48.5 strikes, the expected move for one day, about $3.85. So what I'm going to do here is I'm going to say if we took the current price, we moved up about $4 from 49, that would take us up, around between, let's say, 52, 53 in that range. So I'm just going to go a hair lower than that, and let me open up a couple more strikes. And let's say you had something where you were a defined risk trader. Let me just open up about 40 strikes total. Fine. So the stock's currently trading just over 48.5. I'm going to go up about $3 from there, go up to, let's say, 51.5. And I'm going to make this my at-the-money strike. So now I'm going to do some kind of a funky little butterfly here, and then I'm going to play around with it to see where I could actually do it for a credit. So I'm going to buy the 50 strike. I'm going to sell the 51.5 strike. I'm going to buy the 53 strike. Now let me just change these. And this is going to be a classic butterfly. 1 by 2 by 1. And it's only 18 cents. That's because implied volatility is so high. You'd be paying an 18-cent debit for it. It'd be hard to buy here, but let's just say I'll move it up to 20 cents and say it's a 20-cent butterfly. That's one way of playing defined risk, but that's an extremely low probability of profit. You can see it right here. It's probably less than 13%. So now I want to make this trade, and I want to give myself a little bit better chance of success. So the first thing I'm going to do is I'm going to widen up these strikes a little bit, and I'm going to do this, and I'm going to make this into a broken wing butterfly. So it's 1 by 2 by 1, but I'm skipping 2 strikes and moving it up to the 54. But now I have to pay a 20-cent debit. I don't want to pay a debit for this because in case the stock goes down, I don't want to lose any money. So I'm going to figure out by moving these around, where do I have to move this to get to a credit, or what do I have to do to make this actually a credit trade? See, and this is something you can't do on any other platform. And if you have a small account, this is kind of neat because now I can see, okay, well, if I want to do this for a credit, I can actually do the 50, 51, 52 and a half. And I didn't know that up front. Like I would have to cancel, replace, cancel, replace, cancel, replace, and do all that kind of stuff. Now I just move the strikes around. And here's a really interesting way of looking at a trade where if this underlying goes down, let me unlock this. So this is a 2-cent credit. So if this underlying goes right to 51, I make $1. If the underlying goes, this is the 50, 51, 52 butterfly with a short call spread of the 52, 52 and a half. I'm doing this for a tiny credit. So if this underlying goes over 52 and a half, the most I lose is 50 cents or 48 cents. If the underlying closes at 51, I make $1. If the underlying goes down, I lose nothing. It even covers my commissions. So this may be an interesting trade. I will route it for a small account that wants to have defined risk, that wants to play a binary event. Now we'll go to a slightly bigger account, but not a huge account, for example. And let's say we found an account where we want to sell just an out-of-the-money strangle. So in this case, I'm going to sell, for example, something with a little bit of premium. I'm going to sell the 51 and a half calls, which are just about $3 out of the money. And the skew here should be pretty flat. And I'm going to sell the 45 and a half puts, which are pretty close to about the same. Now, you know what? I'm going to move that I'm going to move that strike down 1. I'm going to sell the 45 puts because there's a little bit of put skew here. And I would collect $1.41 with the strangle with a little bit higher probability of profit. I mean, it's only one day and the vol's so high it skews everything a little bit. But this would be an example of a trade if you had a little bit more capital. The amount of capital required to make this trade would be just about $1,000, about 20% of $50, or just about $1,000. So I'll route this trade. And let's say we had an account with a little bit more money and was willing to take a little bit more risk. You don't increase the number of contracts, but what you do is potentially change the trade. So if I wanted to do that, I could sell the 49 calls, which is the nearest out of the money call, and the 48 and a half puts, and then I'd be collecting $3.54. This is collecting the most amount of money. It's the biggest bet on the board, and it's when you want to take a little bit more risk. Review and send, and there's all 3 trades set up. Then I can look at them, decide what I want to do, and make a decision about if I even want to play First Solar tomorrow. And whatever. If I decide I don't want that last trade, get rid of it. If I decide I don't want that broken wing butterfly anymore, get rid of it, and then just leave in that kind of wide strangle and see what happens. If I wanted to play this particular stock, if I wanted to go back out and say, hey, you know what? I don't want to play that stock. I want to play something with a little bit longer time frame, but I want to play, for example, Costco, because I looked at Costco and at a really high IV rank. By just going to this page, I would notice immediately that they have earnings on October 6th before October expiration. Ooh, that makes the trade a lot more risky. So maybe I'll just back off of that for a second and I'll go to something else with high implied volatility. And I'm going to go to Apple. And Apple has earnings after October expiration. This is far more interesting to me. So I'm going to look at regular expirations. I'm going to go to Apple, and all of a sudden you have a stock in play. It's trading just around 150, trading right around 153. So let's say I wanted to sell, for example, the 152 and a half calls, which are about $9 out of the money. And let's say I want to sell the 145 puts, which what am I looking at here? Oh, I'm sorry, not 153. Take that back. Hang on, wrong leg. The 162 and a half. That's what I meant. The 162 and a half calls and the 145 puts, which are about the same price, which are about the same distance away, approximately the same deltas, and I'd be collecting $1.52 for an Apple strangle, and that's for accounts that have a little bit more capital to do, that wanted to sell some naked premium. Here's your 1 standard deviation move. Here's your 2 standard deviation move. Here's the current price, and here's the stock expected move in in October. The other nice thing about this platform and about Tastyworks is we don't judge you. So we don't make you jump through hoops to be permissioned to do different things. We have one choice, which is the works, and you're permissioned. If you choose the works, you get permissioned for anything that your capital allows you to do. So we don't make you prove to us that you're capable. We don't believe that the complexity of a trade is necessarily measures the risk, meaning we're not going to disadvantage you by making you trade something that you don't want to trade just because you don't meet some suitability requirement at a different firm. And that was very important to us. So the way we use Tastyworks is anybody can do anything as long as you have the capital to do it. And that's kind of a really neat way to treat trading. Anyway, so here's a Apple position. Here's a first solar position. I'll cancel this first solar position. I'll cancel this Apple position. And again, if you wanted to go back into Apple because you like the high IV rank, but you don't want to use all the capital that's required to put that position on an Apple. So you know what? Let's go back to an Iron Condor and Apple and just choose this one. But now I'm going to move the strikes down a little bit just to give myself a little bit wider range. And this is a neat thing to do. And since Apple's dropped $7 this week, I think I'm going to do a 5-point wide, hang on one second. I think I'm going to do a 3-point wide put spread and a 2.5-point wide call spread. And I'm going to collect, in this case, about 1/3 the width of the strikes, or 98 cents. Now, all the trades I looked at this afternoon, I really like this trade. So this trade, I'm routing till tomorrow and I'm leaving in. It's kind of neat. And so that's how this platform is set up. That's the beauty of it. It allows individuals to use their brain. It's intellectually challenging. It allows you to mess around with different strikes. It allows you to, again, to trade small, to trade active. It doesn't restrict you from what you can do. It makes you focus on not trying to guess where the underlying is going to go. It makes you focus on the strategy, on being strategically diversified. It makes you think about trading, and it makes you think ultimately about wealth creation. We are about wealth creation. We're not just about, hey, try to make a $1 million scalping the S&Ps or whatever else it is. We're about wealth creation. Wealth creation is a derivative of the number of decisions you make. How do you make a lot of decisions? You play around with your platform. You trade small, you trade often, you make decisions. You learn how to test your tolerance for risk, and you learn how to commit to applicable strategies that fit your agenda. It's really interesting. Okay, I've talked for an hour straight. You're probably sick of me. And I'm sure Alan and Chris are very much tired of all the questions I'm sure they're getting right now. But it's been a fantastic opportunity to talk to you. Fausto is a really good friend of mine, and he's even a better person than that. I mean, anybody out there that knows Fausto knows that they always use the example of, who's the kind of person you can go out and have a drink with or go out and break bread with, and he be that person. So I feel good that we've had an opportunity to get to know each other over the years. I wish we could have done more together over the years, but life is what it is. And but it's so cool to have an opportunity to speak to you today, and it's so cool to that he's back and we're working together. And I think that what we're doing, what we're building, content-wise, technology-wise, fee structure-wise, and some of the stuff we're doing next year, if you sign up through Tastyworks, it helps Fausto, it helps us, it helps the whole community, because we're advocates for self-directed investors. Just to give you some idea, we're the only firm out there fighting in front of the Department of Labor right now, trying to get the restrictions lifted for naked options in an IRA account, naked calls in an IRA account. We're busting our butts. We're spending a ton of money, our own capital, to get to places that nobody else, would ever even dream of going. And we really hope that, you continue the incredible support for us. And we hope that we're able to, entertain you, edutain you, every chance that Fausto allows us to over the next couple of years. It was awesome to spend an hour with you. And Fausto, I hope you're I hope you're back online now. Thanks so much.
I am, Tom, and you know what? Thank you so much for coming, and I appreciate. Thanks for the great compliments, and I can't say it. I mean, the relationship we had for over the years, and like I said, you gave me a great opportunity so many times to speak, at other events, and it helped us. And like I said, great traders surround themselves with great traders, and guys, when you look at the Tastyworks platform, I told Tom this, and I don't like bashing any platforms, but this is like hands down. He finally tweaked this thing, so much more easier to understand. It's just a simple, great platform. And guys, like I said, if you click on that link right now, if you want to start getting your trial and your account up and ready and running, like I said, go out there, just try it. Listen, you're getting basically firsthand on something that I think is probably going to be the next best thing since sliced bread. I mean, it is a great, great, great platform. You saw how it works on the options trades and everything else. But when Tom builds something, he spends more time. I never, ever, ever met anyone other than my mom that works as hard as Tom. I mean, I got to be honest with you. I says, Tom, you just sold Thinkorswim. Why are you doing it? He loves it. He has a passion to do it, just like me. Some people ask me, I'm like, Fausto, why do you do it? We have a passion. We love doing it. What are we going to do all day? Actually, Tom told me that. He goes, what am I going to do, Fausto? Sit home all day? I got to do something. So, and it's the same thing, and it just shows you that great, great innovators and great technology guys and great traders will always come out with something, and now you have the opportunity to get something what everyone's been looking for. So, guys, I'd like to thank Tastyworks and the staff of everyone for coming. Tom, thanks for having me. I look forward to seeing you next week. And everybody, click on that link, get the poll started, start getting your platform, and we're going to run a really big promotion. You get your trading, you get the Tastyworks up and running. CTU is going to really give you incentives for it too. So, and the only way to know what those are is after you register, right, guys? Thank you so much, everyone. Thanks, Chris. Thanks, everybody. Thanks all the students, CTU, for showing up, and we'll be looking forward to have Tom back again. Thanks, everyone. Enjoy your evening. See you tomorrow in trading.